Minimum payment, $187. That's the line on the statement. You look at it twice. You could pay it off. You have the money this month? Barely. But the minimum is right there. Smaller number, easier number. You pay the minimum. 3,000 miles away, someone else is looking at the exact same number. Same age, same paycheck, same statement almost. They pay it off. All of it, tonight. Neither one feels like a decision. Both of them go to sleep the same way. Fine, normal, nothing happened. One of them just lost 6 years. The number on that statement has a rate attached to it. Most people never look. 22.9%. That's what the card is charging, not what you bought, not whether you felt responsible. Just one comparison matters here. The rate on the debt against what that same money could earn somewhere else. That's the whole line. Below it, debt is cheap, cheaper than what your money can buy. So you keep it, you let your money go to work instead. Above it, debt is expensive. More expensive than anything you could safely earn. So it eats you. Quietly, every single month. Nobody draws this line for you. Not in school, not at the bank, not on the statement. You're supposed to just know. Most people don't. So they sort debt the way they were taught. Good debt, bad debt. A mortgage is good, a credit card is bad. Simple boxes, except the boxes are wrong. A credit card at 6% and a mortgage at 9%, same boxes, opposite outcome. The label never tells you which side of the line you're on. Only the rate does. Worth sitting with this for a second. The average American carrying a credit card balance pays somewhere around 21% on it. The average savings account pays less than 0.5%. That gap, 20 whole points, isn't a misprint. It's the entire banking system working exactly the way it was built to work. Nobody explains that gap at 24. There's no class for it. There's no form that hands it to you with your first card. You're just supposed to feel your way through it. This is where the two of them split. Not by income, not by intelligence, not by luck, by one number on one statement at 24 years old. Neither of them sees the line. Only one of them happens to land on the right side of it. The other doesn't know there's a side to land on. Everything after this is just the line, doing what lines do, quietly for decades without asking permission. A debt isn't good or bad. It's a number standing on one side of a line you were never shown. 24 years old. The paycheck lands the same for both of them, $2,650 after tax. Same number, same Friday. This is where Path A buys the TV. Not a big one, just nice. 65 inches on a payment plan, the store called 0% for the first year. Nobody mentioned what happens after the first year ends. The salesperson, a friendly guy named Trevor, didn't lie exactly. He just didn't say the part that mattered. The card carries the balance, $800 at first, then groceries one tight week, then a flight home for a wedding. The balance climbs to $2,400 by the end of the year. The minimum payment is $68 a month. Path A pays it, on time, every month, never misses. Path A isn't careless, isn't bad with money. Budgets, check the account before big purchases. Feels most days like someone who's handling things fine. Just never asked what 22.9% actually costs. Nobody does, at 24. A small detail worth noticing. Path A's apartment has the new TV mounted on the wall, centered, the first nice thing in the place. Friends come over to watch a game. Somebody says nice setup, it feels good for an evening. Nobody in that room knows what the TV is actually costing, month over month, in a way that has nothing to do with the television itself. Path B gets the same paycheck, same Friday, no new TV. The old one still works, slightly too small, little dim in one corner of the screen. Path B still has a student loan, 5.2%, fixed, the same loan everyone has. Path B doesn't rush to pay it off early. Instead, $300 a month goes somewhere else. An index fund. Automatic. The kind of transfer you set up once and then forget exists. By the end of the year, the loan balance is basically untouched. The index fund holds $3,600. Path B didn't do anything impressive, didn't pick a stock, didn't time a dip, just left the cheap debt alone and let the spare money sit somewhere that grows, plain and small. The gap. Path A, $2,400 owed at 22.9%. Path B, $3,600 growing, while a 5.2% loan just sits there, untouched, unbothered. Nobody would notice this at a dinner party. Both of them still look the same apartment, same car, same jokes, same complaints about rent, but one of them is paying rent on borrowed money. The other is collecting it. No effort, not income, just which side of the line the money landed on. 27 years old, same week, almost. 2 separate cars, 2 separate breakdowns, a transmission, mostly gone, $4,040 to fix it. Not optional, both of them need the car for work, and there's no version of either life where they just don't drive for a while. Path A doesn't have $4,000 sitting anywhere. The card again. The same card, the one that never quite cleared. The balance was already at $2,400. Now it's $6,440. The interest doesn't stop at being polite about it, it just compounds on whatever's there. Path B doesn't have $4,000 sitting in checking either. But there's a savings account, built slowly, almost by accident, out of the money that didn't go toward a TV 3 years ago. $4,040 come out of it. The account drops to almost nothing. Path B feels that. Watching a savings account empty out in one transfer never feels like anything. There's a small flash of panic, standing in the mechanic's waiting room, watching the number on the phone screen drop. But the index fund doesn't get touched. Not $1 comes out of it. That decision matters more than it looks like it does. By the end of the year, Path A owes $7,100. The minimum payment alone is $164 a month now, and most of that is interest, not principal. The balance barely moves, no matter how faithfully the payments arrive. Path B's net worth sits at $11,200. The savings account is rebuilding, slower than it emptied. The index fund never stopped growing because it was never asked to. Same emergency, same dollar amount, same age. One of them paid for the breakdown with money that was already theirs. The other paid for it with money that doesn't belong to them yet, and won't, for years. Path A isn't reckless. Path A handled a $4,000 emergency the only way available, because there was no fund sitting underneath, waiting. The card wasn't the mistake. Not having anywhere else to go was. Not about who panicked. Neither of them panicked. It's about which one of them built a place to fall. 3 years before they needed it. 30 years old. Both of them need a car. The old ones finally give out almost in the same month. Path A walks into the dealership first. The loan office holds the credit file. 7 years of minimum payments, on time, every single one. Path A is proud of that file, has every reason to be. It represents real effort, the kind of quiet, boring effort nobody throws a parade for. But the file also shows a credit card that's been carrying a balance since age 24. Never zero. Not once. Some years it shrinks, some years it grows. It never disappears. The rate that comes back is 9.4%. Path A doesn't know why it's that high. Nobody explains it that way. They just say your score, like the score is a weather report instead of a number built entirely out of decisions, most of which happened years ago and were already forgotten. Path B walks into a different dealership the same week. No missed payments either, but no revolving balance. The student loan, still sitting at 5.2%, untouched on purpose. The index fund, still growing, is somewhere past $40,000 by now. The rate that comes back is 6.1%. Same car, almost. Same loan amount, almost. 3 points apart. 3 points don't sound like anything. Sounds like a rounding error, the kind of thing you'd skip over when reading a contract. Over the life of the loan, it's closer to $2,000. Gone. Not spent on anything, just the cost of the rate. This should sting more than it does. Path A did everything right by the only definition Path A was ever given. Paid every bill, never late, never missed, and still got charged more for the exact same car. The system was never grading effort, it was grading exposure. How much of you is already promised to someone else? At what rate? For how long? Path B wasn't smarter at 24. Path B just happened to leave a 6% loan alone instead of opening a 23% one. Not a forecast. Not a strategy session. One quiet Friday 6 years earlier when a TV was in the store. That single decision is still charging interest. Still collecting it too. Discipline didn't decide who got the better rate. Position did. 34 years old. A house comes up in both of their lives in the same spring. Different houses, same kind of moment, the kind people remember for the rest of their lives, one way or another. Path B gets pre-approved in 11 days. The mortgage rate offered is 6.3% fixed. Path B's advisor, a calm woman named Marisol who works out of a strip mall office with bad coffee and good spreadsheets, runs the numbers out loud like she's reading a recipe instead of making a financial decision. The index fund, 10 years deep now, has averaged closer to 9 or 10% a year. Marisol doesn't tell Path B what to do. She just says the math plainly. Borrowing at 6, earning closer to 9. The gap works in your favor. Path B signs, keeps the mortgage. Doesn't touch the index fund to pay it down faster. The fund keeps compounding underneath the house like a second foundation nobody can see. Path A applies for the same kind of loan that same spring. The application gets further than expected, then stalls. Debt-to-income ratio, the underwriter calls it, the same 3 words on every denial letter that ever made anyone feel small. The credit card balance, the one that's followed Path A for 10 years now, never zero, is still sitting there. $11,000 now. The math doesn't work, not because Path A doesn't make enough. Because too much of what Path A makes is already spoken for, every month, by interests that started as a TV a decade ago. The loan officer says try again in a year, maybe 2. Path A goes home, renew the lease instead, says it's fine, says there's no rush, repaints one wall of the rental, the color the landlord allows, because it feels like doing something. That same fall, Path A's mother gets sick. Nothing fast, just slow and expensive the way it usually is. Path A drives 2 hours each weekend, sits in a hospital cafeteria eating vending machine food, and tells nobody at work why Mondays feel heavier lately. There's no asset sitting anywhere to absorb any of it, just a lease, renewing itself, at a rate someone else sets, and a weekend that keeps costing money nobody planned for. Path B isn't celebrating the mortgage. It's just paperwork, a number, signed, filed, barely thought about again. Path A isn't grieving the loan denial either. Not really. It just feels like bad timing. The market, the economy, something outside. It was never the economy. It was a TV, a transmission, and 10 years of a number nobody ever wrote down next to its rate. Desmond doesn't call Path B first. He calls Path A first. An old friend from college, starting something small, a logistics consulting firm, 3 founders, room for a 4th. Buy-in is $15,000. Path A says yes, immediately. The way you say yes when someone you trust hands you a piece of something real. Then spends 3 days trying to figure out where $15,000 could possibly come from. There's no portfolio to borrow against. There's a credit card with a balance again, crept back up after the car, after the mother's hospital bills, after life being life. No equity in a house, because there's no house. Nothing sitting anywhere that a bank would lend against. Path A calls Desmond back, says maybe next time, says the timing's off, says congratulations, and means it. Desmond calls Path B the same week, almost as an afterthought. Path B doesn't have $15,000 in checking either. Nobody does, sitting there doing nothing. But there's a brokerage account past $200,000 now. The same fund that started at $3,600 14 years ago, untouched through every dip along the way. Marisol explains the option. Borrow against the portfolio. A margin loan, close to 7%. Don't sell anything. Don't trigger a tax bill. Let the fund keep growing underneath the loan while the loan funds the buy-in. Path B signs the paperwork in 4 days. Wires the money. Doesn't sell a single share. Desmond's firm grows. Not dramatically. Steadily. The unglamorous kind of growth nobody posts about. 3 years later, it's worth 4 times what it was. Path B's stake is worth $60,000 now, on a $15,000 loan that's mostly paid off. This moment doesn't show up as a number on a chart, it shows up as a door. One that opened for the person who happened to be ready and never even appeared to the one who said yes first. Path A never saw a door close. There was nothing to see, no rejection letter, no bad news. Just 3 days of phone calls that ended where they ended, and a life that kept going the way it was already going. The real cost of the wrong side of the line was never the interest. The interest is just numbers. It's the version of your life that never got the chance to start. 45 years old. 21 years since the TV. 21 years since the index fund. One night after the kitchen's clean and the house is quiet, Path A opens a spreadsheet. Not for any particular reason, just curiosity, the kind that shows up uninvited at 11 p.m. Every statement, going back as far as the records exist. Every minimum payment, every interest charge, line by line, year by year, the total comes out to $39,100. Not the principal, just the interest. Just the rent paid on money that was never really borrowed for anything worth $39,000. A TV, a transmission, a procedure, a few rough months strung together over 2 decades. Path A sits with the number for a long time, doesn't call anyone, doesn't say anything out loud, closes the laptop, goes to bed. Path A's net worth the same week sits at $51,000 total. A 401k contributed to on and on. A paid-off car, no real estate. A credit card balance that's been above zero for over 2 decades, never gone for long. Path B's net worth sits at $1,100,000, $1,049,000 apart. 2 people, same starting paycheck, same kind of job, 21 years. None of it came from one big decision. No lottery ticket, no inheritance, no single brilliant trade either of them made. It came from a TV paid off the slow way instead of the fast way. A $4,000 emergency covered with savings instead of plastic. 3 points on a car loan, a mortgage that stayed cheap while a fund grew expensive in the best possible sense of the word. A phone call that became an open door for one of them and 3 wasted days for the other. Each moment alone looked small enough to ignore. Path A isn't lazy. Never was. Worked the same hours as Path B for the same kind of paycheck for over 2 decades. Helped raise a kid who got into a good state school that fall, paid for partly out of pocket, partly out of a loan that carried its own quiet rate, nobody compared to anything either. The difference was never effort. It was which side of one number, checked or not checked, every single time money moved. 50 years old. The same year almost, a doctor says the same kind of sentence to both of them. Nothing fatal. Just a procedure, recommended sooner rather than later. The kind of news that rearranges a Tuesday without rearranging a life. The bill after insurance comes to $6,200. Path B doesn't think about it for more than a few seconds. A transfer goes out from a high-yield savings account that exists specifically for moments like this one. Not the index fund, not the mortgage, just a buffer built years ago and topped off automatically ever since. The procedure happens on schedule. Path B takes 2 weeks off work, doesn't think about money during either of them. Path A gets the same diagnosis, the same recommendation, around the same $6,000. No buffer is sitting anywhere with that name on it. The credit card again, paid off 2 years ago, the long climb finally finished, is now carrying a balance once more. Not from relapsing into bad habits, because there was never anywhere else for an unplanned $6,000 to come from. The rate this time is 26.9%. Cards renegotiate themselves upward, quietly, and nobody reads the fine print update that arrives in an email most people delete on sight. Path A delays the procedure 4 months, waiting for a slightly better month, a slightly smaller balance, a slightly less impossible time. The doctor says it's fine to wait. Mostly. Mostly is doing a lot of work in that sentence. It was never just about money at 24 or 30 or 45. It was about what money buys you when something happens that nobody planned for. And almost everything that matters eventually falls into that category. 26 years of asking one quiet question bought Path B something that doesn't show up on a balance sheet. Permission to not think about a doctor's bill for more than 5 seconds. 26 years of working just as hard, paying every bill, never missing anything, bought Path A 4 months of waiting and a statement that will take another 2 years to clear. Neither would call it fair or unfair, sitting in their separate waiting rooms. It doesn't feel like an injustice. It feels like the kind of thing nobody talks about at dinner, that some people get sick and disappear for 2 weeks, and some people get sick and have to manage the timing of it too. Path B's wealth was never really about the number in the account. It was about removing the friction from moments exactly like this one. Path A's debt was never really about the TV or the transmission or any single thing it paid for. It was about adding friction to every moment that came after, including the ones with nothing to do with money at all. 26 years on the wrong side of the line doesn't cost a missed vacation or a smaller house. It costs the 4 months you wait to take care of yourself, because the math has to work first. 55 years old. The habits aren't habits anymore. They're just who each of them is. Path B doesn't think in terms of debt and savings anymore. Hasn't for years. Every dollar gets asked one question before it goes anywhere. Above the line or below it. The mortgage, still cheap, still fixed, sitting below the line, untouched on purpose. The brokerage account, now over $2 million, is still compounding underneath everything else like a current nobody sees. Path B doesn't feel rich. That word never quite fits. Just feels like someone who stopped asking the wrong question a long time ago. So long ago the new question doesn't even feel like a question anymore. Path A still thinks about money the only way anyone ever taught. Debt is bad, saving is good, work hard, and it'll work out. That belief never really failed Path A, it was just never finished. Nobody added the second half. Which debt? At what rate? Against what? The credit card is gone now, paid off 2 years ago after a stretch of discipline that looked, from the outside, exactly like the discipline Path B used the whole time. That's the hardest part to sit with. Path A was disciplined. Just never aimed at the line, because nobody ever pointed to it. There's no single villain in this. Just a question that was never asked, repeated for 3 decades. Path B didn't work harder. Didn't earn more, most years. Had plenty of bad months too. Path B just kept asking one question, starting at 24, long before there was enough money for the question to matter. By the time it mattered, the question was already a habit, and the habit had 31 years to compound. Nobody handed Path B a different kind of paycheck. Nobody handed Path A a worse one. Same income, most years, same kind of job, same kind of mistakes, even the car, the emergency, the tight months, the friend with the opportunity. The difference was never the money coming in. It was one comparison, made or not made, every time money went out. The rate on the debt, against what that same dollar could have earned somewhere else. The whole mechanism, always just that. A mortgage and a credit card are the same instrument. Money now, money back later, plus a rate. The label never tells you which side of the line you're on. Only the rate does. Discipline doesn't save you on its own. Path A proved that the hard way for 31 years. You can pay every bill on time, never miss a payment, never feel reckless, and still be on the wrong side of a line you never knew existed. The line doesn't ask if you tried. Doesn't ask how many hours you worked, or how responsible you felt, or how good your intentions were the day you signed the paperwork. It just runs the math, quietly, for as long as you let it. Somewhere right now, someone is 24 years old, looking at a credit card statement for the first time. Minimum payment, $191. They don't know about the line. Nobody's drawn it for them. Nobody will. Not really. Not at the bank, not at school, not anywhere a 24-year-old is likely to be standing when it would actually help. Somewhere, that television from 24 years ago probably isn't even hanging on a wall anymore. Long gone. Replaced twice over, maybe sold for nothing at a yard sale, maybe just hauled out to the curb one weekend. The interest is still there. 10 years from now, whoever's looking at this statement won't remember what the card actually paid for. The purchase disappears. It always does. The interest doesn't.